Welcome to the Commonwealth Home Ownership Podcast, the real estate investing podcast for Canadians. Whether you're a seasoned investor or just getting started, you've come to the right place. If you're looking for a way to take control of your life through real estate investing, stay tuned and be sure to join us at cwho.ca, your hub for all things real estate investing in Canada.
Hey everyone, welcome to episode 20 of the Commonwealth Homeownership Real Estate Podcast. Today we'll be going over how to avoid analysis paralysis. Before we get started, I just want to quickly mention some of our upcoming events. We have our 2021 associate program starting in February. So if you've ever wanted to learn how to do joint venture investment real estate, as well as walk away from the program with a high cash flow, well-performing investment property, is something to check out. Our last year's property is currently generating 29% year-over-year returns. We also have our upcoming mortgage series where we partnered up with a Alberta mortgage specialist to bring you a monthly updates and news on the mortgage industry. And we're also starting up our monthly masterminds again, our monthly mastermind networking events. So more upcoming on those events. And to find out more information, please check us out at cwho.ca. Without further ado, let's get started. So I'm Phil Wong, and joining me as always is Brad Price.
Thanks for the intro, Phil. Cool. So, Phil, what with such a crazy year was such a
okay. If I can stop you for a second.
Yeah, go for it.
I just want to touch base that Brad just got COVID, and he just got over COVID, so he's still with us, thankfully. How are you feeling?
Yeah. Not too bad. Pretty good. You might notice that I occasionally will get a little bit short of breath. I'm still having some breathing issues, but other than that, not too bad. A little bit lower in energy, but honestly, all in all, compared to the first sort of week and a bit, yeah, I'm a lot better. I mean, I'm hoping this is still not the new normal. I'd like to just get back to what was normal as quickly as possible and regain some energy again. But yeah, all in all, I'm thankful for kind of the way that it panned out and that we were able to get through it here. So
that's awesome. Brad, I believe you were going to introduce
I just wanted to I wanted to kind of touch base on 2021 and something that I don't know, after going through sort of a crazy year such as 2020, it can almost feel like you've sort of stalled a little bit. And it can be difficult to kind of start planning out and looking at your goals again. But analysis paralysis, I think right now is a bit of a kind of a important topic to maybe touch on for how we look at 2021 and how we strategize, how we start planning out our goals for next year, but also how we move past the analysis paralysis based on the unknown. Everything that's going on. Yes, there's a vaccine coming out, but that's not just going to be this cut and dry, pull the curtains closed and everything goes back to normal and everybody's good again. Like, that's going to be a slow process for most people, and
for at least a year. I would imagine that it's going to slowly roll it out over the course of a year. So it'll still be many months where I think the COVID will still be a significant factor in our lives.
Yeah, totally. So one thing that, when as you're chatting with people, and especially Phil, being in the real estate industry, you will always come across individuals that will say, oh, I'm just gonna kind of sit back and wait, or I'm researching this and I'm not sure, or I just don't know if I should do this or do that. And it's a lot of the time it just comes back to, well, have you done the research? Have you done your due diligence? And what is the market saying? What is the mathematics saying? Do the numbers still work? Because, well, really, there's only one way from here, and that's up. So, you know, as the vaccine rolls out, as things start improving, I think we're gonna see some sort of return to normalcy. But
Mhm.
throughout this next phase, there's going to be a lot of opportunities. So, you know, you don't want to be stuck in analysis paralysis, and this next kind of 2 years rolls by, things are firing again, and you were not able to take advantage of opportunities because it was difficult to kind of gain clarity on what it is that you want to achieve. And you know, there's kind of analysis paralysis, then there's shiny object syndrome. So you're running around looking at all these different opportunities, not necessarily taking advantage of any, but then also you're analyzing everything so much because of all this kind of third party information coming in that the world's falling apart, that you don't actually pull the trigger on anything.
I think there's also, I imagine there'll also be some residual anxiety with respect to 2021 after what happened this past year too, right? So, and I think it's important to, keep in mind that, yeah, try to separate the emotion from the logic, which I imagine can be quite hard sometimes.
Yeah,
But
I don't suspect that that's an easy thing to do, if you know, in most cases. But it, it also comes back to surrounding yourself with like-minded people, and people that you can kind of bounce ideas off of, that are not instantaneously going to tell you something is flawed based on their emotions.
and that's okay. That's a key word, emotions, right? Because you gotta be. It's ironic because it's emotions are a two-sided coin. Because emotions can keep you from making the right decision. Emotions can also cause you to make the wrong decisions. But in the end, no matter how much you analyze and how much logic you place into a decision, in the end, it's that emotion. They've actually have been studies done, but it's actually emotion that triggers you to make that decision, right? So you just have to make sure that you still need to be emotional to an extent, but you have to make sure that it's under control and doesn't run away with you too far in one direction or the other. Interaction, I think, is more important than ever. But anyways, regardless of whether, I mean, there's been less uncertainty now, right? Recently, with the news of the vaccine coming out, I mean, as of this recording, they should be rolling it out in Canada tomorrow, the vaccine.
So who's going to get hit first with it?
So they have 30,000 doses available in the first batch in Canada, and they have already earmarked a number of hospitals and long-term care facilities and their staff, like usually like frontline healthcare staff, to get the vaccine. And it was actually one of the requirements dictated to Pfizer via the Canadian government when they drafted the contract for this vaccine, that frontline staff have to be vaccinated first. So
Okay.
that'll be who's getting it. In Alberta, I believe that there's 3,000 doses earmarked from the first batch earmarked for Alberta frontline staff. So most of the major hospitals and a handful of the long-term care centers.
Okay, that's great. That's great.
And then over the course of the year, they're going to slowly roll it out to other populations. So
okay.
Based on that, that's a lot better. There's a lot less uncertainty based on that. So we were talking about the Canadian recovery benefit a few weeks back, how that's going to end in April, right? And that's the new version of the CERB account. So that we were saying that if we wait once April rolls around, say June, July, you might seeing a lot of people who otherwise was doing well on the CERB might not be doing so well now that the money's dried up, and may need to go into foreclosure, etc. But now with the vaccine, again, that's that may be less of a concern now, right?
Yeah, well, it's definitely going to allow people to get back to work sooner.
Yeah, especially healthcare. I mean, healthcare workers, we've always been working, so that's not really an issue. But back to the restaurant industry, all the service industries that people have been laid off of from months on end last year. Now they might not be a concern anymore. But again, it really comes down to how quickly they can roll out the vaccine, which is still up in the air. They need to inoculate 35, 37 million people in 9 months. I mean, that's a tall order by any
I
standard.
definitely don't, especially with the transportation requirements of the vaccine and the temperature monitoring. That's
the cold chain. Make sure ensuring no cold chain breaks along the way, especially to smaller centers. That would be more difficult because in Alberta they only have two major facilities that can store the vaccine, and one's in Edmonton and one's in Calgary. So that to get anywhere in between, you have to make sure that the cold chain. I mean, it's not the first time people have transported vaccines. I'm sure we'll be fine. But I think the whole point of this is, I'm just saying, no matter the uncertainty, I think it's important, as long as you keep to the fundamentals of investing. Make sure there's what was Warren Buffett's term? Margin of safety. That's what I'm looking for. As long as there's a margin of safety in your investment plan, especially when you're doing your analysis, that there's a buffer for contingencies. But as long as there's a margin of safety that you can, even in that, this is what you can make, this is what you're getting it at, and there's this zone that is very cushy, that even if you make some mistakes, you will still end up making a profit. I think you'll be okay. Right? So as long as you're prudent with your investment, and you don't play too close to the profit line, as long as you make sure there's a good buffer, there's really no reason not to jump in, regardless of the market conditions at the time, right? I mean, unless the economy is going to hell in a handbasket, unless it's 2000, even if it is 2008, 2009 again, there were tons of opportunities. Because if you invested back then, like we would have stopped working 5 years ago. Right?
Yeah, absolutely.
But so I think it's important. Yeah, it's important just keep with the fundamentals, because like you said, it can only be up from here.
And I think if you are able to analyze or find deals that, when you do your analysis, the deals, the numbers are honest, but that they really show good positive cash flow, and if you're able to be in a position to just maintain a decent enough reserve fund, like that's still going to be a solid investment. Especially, like, how good is that going to be in a good market? If it works well now, how good is that really going to be in a strong market?
If you make money now, you can make money any time, really, right?
Yeah, absolutely.
So
I mean, yeah, the key point is really just don't let the noise create this unbridled anxiety that creates the knock-on effect of analysis paralysis, and you end up in this cyclical cycle of analyzing every deal and seeing that the cash flow is not good enough, when maybe it actually really is. Because like you say, if we are in a bit of a softer market here, working in a slump or into a recovery phase, if you're still able to generate a few $100s cash flow, that's a decent margin of error to be playing with.
Yeah, I guess for those of us who have been doing this for a little while, stick to your fundamentals. Stick to the process that you've always known that's worked. I think that'll serve you well. And for those of us who haven't been doing this for that long and still have a bit of uncertainty when it comes to our decision making, talk to people who have done it for a while, and then get their opinion. See what they think of a deal and whether or not it's a good buy or not at this time.
Yeah, in one of our previous episodes, we talked about reserve funds for 2021, and just trying to make sure that each property has its a fortified reserve, to work through 2021, just in the chance that maybe things, don't recover as quickly as we would like them to with the vaccine. Hopefully they do, but if they don't, we just want to make sure that we do have a little bit extra money aside. So that would be one recommendation that I would definitely make right now to anybody getting started, is just make sure you have access to capital somewhere that you can either pull from if should you need to, or you can just sit it in your property reserve. But that's definitely something that might give you a bit more confidence if you're thinking about making a move into an investment.
Mm-hmm. Good advice. All right, everyone, that is it for this week, short and sweet. For our past episodes, please check out our YouTube channel, or to listen to our podcast, you can find us on your favorite podcast app. Thanks again for listening, and catch you guys next time. Bye.
Thank you for listening to the Commonwealth Home Ownership Podcast. Be sure to check out all of our past episodes and our ever-growing library of content at cwho.ca. Until next time, remember to get out there, take action, and create a life of wealth by design.